Well, good day, all. Ira Epstein, and here we are on Monday, February 5th, 2024. Yeah, that's it. And we're getting on to 6:30 p.m. Central Time. You know, it's the day after, and I don't know what more I can say about it. The jobs report shook the market to its core. I read over the weekend. I thought about it all weekend, too. Did anyone see 350,000 plus jobs coming? No. Nobody in an estimate, not one I read. And then the big revisionments for December and even a revisionment for November. So what it means is the Fed's got to stay restrictive for longer. It also means the stock market's super strong. When people have these kind of jobs, they spend money. If they spend money to a degree, they keep certain parts of inflation up, other parts not. It depends how the supply goes with it. We keep hearing day in and day out now, every single day I'm reading another corporation announces X amount of layoffs going on. You know, you would think, well, that's the restrictive part. The problem is if those jobs numbers we saw in December and January mean that the small private company to the mid-sized private company are gobbling these people up. They're getting good people. They're not paying more, all right? Those days via COVID were let's jump jobs because I'll make more money. I'll make another 20 grand if I just go across the hall and work for that company instead of the one I'm with. I'll do that. That's out of the market now. So the market's used to the price. And if anything, employers are probably up to the point where they're not as desperate as they were for help and they can negotiate. It's a hard word, but I'll bet that is going on to a degree. A lot of people just don't want to be on the unemployment roll. They'll go, all right, this is what I was getting. It's a new opportunity. What are you going to give me? And you negotiate. Doesn't mean it's lower. The package may be worth more money. You can package things. I think that's going on. The dollar, super strong. Back in the 104 area, anything priced in dollars got more expensive. Now, that's good and bad, all right? It's good in the sense that as an Americans, when they're buying goods from us, we're getting a strong dollar. It's bad for those that have to convert to dollars on a weaker currency and buy some good. So the question is it friendly for the energies? I doubt it. I can make an argument. I'm starting to think, that the Brent might be going back to $73, $74 a barrel. I can make an argument for the WTI to get back down here, cracking easily under the 70 mark. So I'm thinking that that's where you're at. I'm obviously thinking the Saudis are a really unhappy group right now. They're counting on certain monies for their budget to do certain things, and I wonder what these prices are doing. They've already cut. Can they keep cutting? I have my doubts, all right? There is a point where you can't hold OPEC together by just keep cutting production. People are going to want more flow of money coming at them, and if prices aren't holding because the U.S. is such a big producer right now, that weighs on it, okay? Things you got to think about. We're chartists, though, at the end of the day, so let's go to the charts and see what we have. But before we go to this first chart, what do we have tomorrow? Tomorrow, you got Redbook Group. They come out with the retail sales data at 7:55 in the morning. We have the API numbers coming out at 3:30 in the afternoon. And we have, 4 Fed speakers. That's where the action's going to be. What are their reactions to what we just saw? How do they explain it away? Where do we think they're at? You got to look for clues. They're not going to tell you what the Fed said in the meeting. That's a no-no. They can't do that. What they can do, though, is tell you what their own thoughts are on the market. And that they're going to be freewheeling with. So we have it all through the day. That's where I think you turn your attention and you get ready for whatever that action's going to be. As we look at the S&P, it's hard for me to put this word in my vocabulary. The market is down at the beginning of a week. We are down 0.4% in the S&P on a weekly chart. We haven't been down in how long? You have this one correction right there. Other than that, it was up and away. Are we overdone? Of course we're overdone. However, that many people working, are you that overdone? I don't know. They have buying power. When we take a look at the chart action, obviously The market, as we know, looking at how things are going here, okay, that's not a crashing market in any manner. The pattern is one of a lower low, higher high. It's not an uptrend on the swing line. The bias is up as the market is staying over, in my parlance, the 18-day average of closes, and the resistance we saw just the other day. The resistance in the market was seen going into, I want to make this clear, going into the jobs report. People were so convinced the jobs report could be a low number, the 160s, and that was going to get the Fed, the naysayers. Now that March play is still there for the Fed. Well, by the end of the day, that wasn't the case with the market. And now we saw the reaction today where the market sold off a bit, and it could even lose more right here. As long as you stay embedded, though, I have every reason to say I'm still friendly in this market as long as the red line doesn't close under 79. In the NASDAQ, are we going to embed? Stay with me. So the market, if we take a look, you got to have 3 days in a row to embed. I teach this in my enhanced Bollinger Band course. What I give you here to the 3, there's more to it than this. I'm not foolish enough to give the course away for free in here. You won't get all the parts of it. And there are parts I make mentally in my mind. I never tell you all the parts at one time. It's in the course. But you're not over both numbers over 80. Okay. So when we come back here, that's Thursday. They weren't that way. Okay. First day they were over 80 was today. Maybe they'll be over 80 tomorrow. If the market can by Wednesday have the numbers staying over it, I can make an argument to go back up. But right now, neutral is the way. A market that's under a bit of pressure as we're talking is in the Dow. Now, the Dow is the one that I thought would hold up better today, to be honest. It was just picking which one you like. It was the market that came down into the buy zone. It held the embedded reading going home. And now the question is it going to lose that reading tonight? Well, doesn't matter. Tomorrow's the day I'm concerned about. If the market loses the embedded reading by closing under 79, I think you got to back away because the odds favor you're going to go down back to the 18-day average of closes, 38,157. If it reverses course and moves up, you're opening the door up for the possibility of 38,990, 39,000, right in that zone, 38,900 rather. Yeah, I think real important right now for the Dow. The Russell's the weak link. And I listen to all these guys that are so much brighter than I am talk on CNBC and on Bloomberg, and they are heads of these big companies. Yes, I'm telling my investors, you've got to own part of the small caps. That's where the money is. Does that look to you like that's where the money's going? I don't think that's where the money's going. You had a catch-up play, but if you look at how much did one index gain for the year versus another, this is a nowhere market right now. And high interest rates are not the friend of these particular companies. It's the place not to be. It's the place you save to go short, not long, in my view. Then we look at what happened here. Now, come on. I'll just walk you to it. It's so simple to see this. Here's the 10-year note. Here's Thursday. Yeah. Tomorrow's that jobs. It's going to prove that March is back in play. I can just imagine what the bulls were saying. I'm going to you, and I said it. You're at an upper Bollinger Band going into a jobs report. I think the smart money's coming out of the market. Never did I think 350,000 jobs. If you think I thought that, you are so wrong. This is Friday's action. Okay, now what do we have? We go back and we stop right where we should. The neutral number is the 18-day average of closes. You don't have a trend. You have a higher high, a lower and low. You were trying to get momentum up. Now momentum's sort of confused. You nosedive today and you're trying to get a little bounce tonight. I think you overdo it if you get down to the lower Bollinger Band. But I don't see anything of importance going on there, and you're already there for all purposes in the 5-year note. So you pulled the plug. That's the right vernacular here. You pulled the plug on the bulls, and now the market has to restructure itself. When we look at the dollar index, went right up today and challenged the 100-day average, almost like it didn't exist, and the Bollinger Band. But they do exist. So yeah, you can go up a bit more here. Okay. But the odds of staying over that Bollinger Band for any percentage of time is only 5%. 95% of the time it's going to trade within the band. And generally, when you come up to the first challenge of a 100-day average, you do run into resistance. So I wouldn't be surprised to see a Tuesday reversal a little bit in the market. I'm not bearish, but could call for a Tuesday reversal and flip-flop that in the euro, which is in the bear camp. That's all. Can we get the Tuesday reversals? Why not? You had a down day in stocks today. Maybe you're up on a Tuesday. We'll see. And then you resume the break again. The market is disappointed. If you don't believe that, write it down put it on a piece of paper on your trade desk. Disappointed market right now. When we look at the British pound, look at how that thing came falling apart. So here's your sideways action. Now, we have the makings in this market of a downside breakout. I think we're there. If we come back together and we look at what did the market do on Friday. All right, we closed at 126.42, not under the Bollinger Band. You're under the band today in the bottom part of the day. If tomorrow we take out today's low, which we haven't done, that's why I said I think we could be there. We got to see if it doesn't, and closes in the bottom range of tomorrow's range, I think it's a breakout. If not, this is false, and we probably get a bounce in the market. Chart-wise, you're already oversold. Bitcoin going nowhere. How long, I don't know, but it has an uptrend that doesn't seem to carry the market, and it keeps just hanging at the 18-day average and closes. When we look at Brent versus April contracts, WTI versus Brent's still worth a bit more money, but look at these markets. They have fallen straight down. Didn't help them to get the strong dollar, I'll tell you that. And you can see it's the same picture here. Really no play at all. But where did the market stop? They stopped at the 100-day average in the Bollinger Band. They stopped at the 100-day average in the Bollinger Band. The key moving averages up there. And traders don't get that. Traders just like to say, it's going to the moon. This is it. This market's been waiting to go to 100. I see that the U.S. is attacking all these places. What the United States is doing with its attacks is it's as gently as it can asking Iran to stop. Get hold of these people. It doesn't want to expand the war. That's what's going on. It really doesn't want to fight with the Houthis. Why? Nobody beats them. Even defeat is glory for terrorist groups. It attracts more people. We've taken on Satan. We've look what we're doing. Look at how we're beating them. And our brothers that are killed, there's more coming to fight them. You cannot win that war. We tried it in Afghanistan. We've tried it in Vietnam. We're trying it in all these spots. You cannot win these wars at the end of the day. The best thing that could happen is peace in Israel, which takes away this argument in the Red Sea, which moves our ships out of way and the end of it. Is Israel going to, at the end of the day, have to concede a Palestinian state? The more I read, the more convinced I become. What lifetime? It might not be mine, but that's what I believe has to come at the end of the day for there to be any peace. All right? Israel's not going to be driven to the sea and out. And Gaza, I really believe, is here to stay. Somehow, this all has to be made to work. When we take a look at how the crude and all are looking, let them go where they might. We know the U.S. economy is strong, so we know that we want that oil. I am not seeing that China's stopping big purchases. I am seeing in oil that the refineries, two of them got hit in Russia, and they are in trouble. They have lost several 100,000 barrels a day of real production. That takes some oil off the market. In the heating oil market, got to get used to the fact that winter's coming to an end. I know you don't want to talk that February 5th, but you got to start looking at gasoline demand. You got to get ready for the maintenance that's going to happen soon, and we'll start drawing on stocks, which will keep this up as we draw on the stocks and don't add to them, but you're getting ready for that shift. And in natural gas, this is the week where we're going to see the House hearings. I think it starts as early as tomorrow or Wednesday with the Department of Energy and this nonsense that they did where they're going to cut new programs because they want to do reports and studies. They want to do reports and studies for one reason that you will hear tomorrow, because it helps get votes for President Biden in a fairly tight election head-on-head with Trump at this point in time. And by the way, Haley's still getting an awful lot of money thrown at her by a lot of wealthy Republicans that want another choice and have their fingers crossed that something happens with the court hurting Trump, taking him basically out of public favor, and she can appear. Read. That is what you're reading in the press. I've given you the synopsis of it. I'm not saying it will happen to Trump or not. I'm not saying who I know will win. But that's what's going on here, and that's the vote buying, and it's going to be called out because of it. Nothing else makes sense. Why would we not want to help our allies in Europe that are giving a lot of money right now, another 50 billion euro to Ukraine and doing everything? Because Russia's on their doorstep. They don't have a choice. We got to help them all. And of course, we can't because everything in America is bogged down right now. Election year politics. That's what it comes down to. Israel, Ukraine, Taiwan, the border, election year politics. And it's a tight race. Don't you kid yourself about it. So join me in the mornings as I discuss all this. But we really talk charts. And at the end of the day, that's what I am. I'm a chartist. And I look at a chart. I like to cover the name of the chart. And we look at this and we say, okay, look at this chart action. Here you go. Here you don't go. They'll be losing trades. They'll be winning. But everything I do is based on the action I show you. Then you can discard it. You can say, nah, that makes sense. I've been looking to do that. Here's the reason I want to. Yes, I like that. Here's the weekly. Here's the daily. We cover all this. And what does it cost? I swear to you, the price of a cappuccino. That's basically what you're dealing with. Go to Starbucks, get one, give the kid a tip. That's about where you're at. $7.95 for 30 days of this. Come on, give it a try. Go to iraepstein.com. Under the word research or up here. And some of you wise guys, well, he's pitching that. Yeah, I am. The business that makes this happen. If I don't make money, I'm not doing these videos. Okay, I'm not that nice a guy. This is a feeder into those. Help me to help you. I'm Ira Epstein. You have yourself a great evening.